This is my review of the third week of February 2025 and every trade that I took in that period. The week was a disaster. Every single setup that I took this week lost. I took six trades this week. I opened six positions. And to be fair, every single one of them was actually, at least as far as my present rules are concerned, a legitimate setup. Although I'm hoping that on closer review, the review I want to do in this video, I'll be able to find some of them that I could potentially have avoided. But in hindsight, I don't think it was possible for this week to be a winning week. I'm not sure there is much I could have done differently, given everything I knew going into the week. That said, I am now on a six trade losing streak. It would have been a seven trade losing streak because I lost the last trade I took on the tail end of the previous week. And but of the six trades I took this week, five ended in full losses. But the last one, the sixth one, which would have made it my seventh loss in a row, I got stopped out at break even. I decided to move my stop to break even. But the setup actually ended up losing. So if I had not moved it to break even, that would have been a seventh consecutive loss and six losses on the week. Let's take a look at the trades that I opened. So I think it was four on Euro USD and two on GBP USD, one on NZD USD. If I just go down to the execution time frame, so this is the weekly candle. An inside bar, tiny range candle, didn't really go anywhere, traded up, traded down, traded back up. We'll see. If we go down to the daily, you see the week was very inconsistent. You see, this was Monday's candle. Monday was a doji, weren't expecting much. Tuesday expanded lower, Wednesday expanded even lower, came into this daily fair value gap. You're expecting for price for this daily fair value gap at least to push price higher. It did that, but not after disrespecting the fair value gap. You can see that it traded into it on Tuesday, traded through it on Wednesday, and then on Thursday, for no reason, spiked up. On Thursday, you're expecting a continuation of this bullish move, targeting possibly this high. Nope. What happened? Traded bearishly. It was a pretty messed up week of price action. Now that I'm viewing it in hindsight, a very difficult week to make any money on. Oh, by the way, if you thought, okay, this fair value gap got disrespected, and not a bearish daily fair value gap has been created here. These position tools are annoying me, but I need them to review my trades. But you can see there's a bearish fair value gap formed here. If you thought, okay, bullish fair value gap disrespected, bearish fair value gap created, you know, and then on Thursday you were looking to go short. Bam! Look at that. And that happened to me. I went short on Thursday and took a loss. But we'll review every single trade. Let me go down to my execution time frame and we'll see all the trades. So my first trade for the week was this one on Tuesday. You can see that it went into a bit of profit, ended up taking me out for a loss. Wednesday, one trade, straight loss. Friday, I took two trades. The first one was a loss, and the second one, this was the one I got stopped out at break even after price went almost, what was that, 2.5 R in profit. We'll talk about all of that. So I got stopped out at break even, and then it ended up being a loss. If we go to the pound dollar, I took one trade on the pound on, what was it? It was on Wednesday. That was a loss after it went to, I think this was about 2.7 R in profit. And then I also took another loss on the pound on, no, did I take this loss on the pound? Yes, I took this loss on the pound on Friday. And then the New Zealand loss was this one that I took on Thursday. It was a short trade I took on Thursday that ended in a loss. This trade right here is a potential short trade that would have worked out that I missed, that I did not take. But my bias on the day was not bearish, my bias was bullish. So although I missed this trade, and I missed it because I was not at my chart when it played out, I don't know that I would have taken it. But if you want to talk about did my system yield any profitable trades this week, it was just the one. So in hindsight, every single one of the trades that I took was a valid setup according to my rules. I'm not sure there's much I could have done differently on the week, knowing what I knew going into the week. But I'm sure that in hindsight, as I review every single one of these trades, I will discover some habits that, some things I could have avoided doing, or some setups that I maybe could have avoided taking, or identify a common thread between many of the losing setups that I took, which I have started to identify so that I can maybe just scrap them from my playbook going forward. So, what happened? This is the daily time frame. My bias was bullish. Friday last week, this was its candle. It completed the formation of this daily fair value gap. And we can see that Monday started this, let's call it a pullback. Monday was an inside bar. If you look at this now, at this point, you don't know what is happening in price. The expectation is price has been trading bullishly. This low was not taken out. This low was put in. Price has been running, created a daily fair value gap right before taking out this high. The draw on liquidity, as far as I'm concerned, this is a monthly fair value gap here, a daily fair value gap inside. We are trading out of a monthly fair value gap. Reasonable draw on liquidity, reasonable expectation for price to trade higher. What does price do? And I liked Monday's price action because this suggests to you that price is just building momentum, because now it has created this lower high very close to this high that you're expecting to get targeted. And you like to see that. You like to see there be a liquidity target, price comes very close to it, and then seemingly trades away. But because we're overall bullish, it still just trades back into some higher time frame PDRA. In this case, I would have expected that to be the fair value gap, and then takes out the liquidity pool. So on Tuesday, I had my alert here. You can see this green line is where price tapped into the fair value gap. Let's go to Tuesday's price action to take a look at the trade. Perfect trade, and then there was no news, nothing, no problems. Now, this is exactly what I like to see. You see, this low completed the formation of the daily fair value gap. Price traded correctively. Now, look at this beautiful setup. Price comes down during Asia, creates a low during Asia session. Perfect A plus setup that you absolutely like to see. You want to see price come lower, create a low on top of the daily fair value gap, so that price takes out that low as well as the liquidity low that forms the fair value gap, trades lower, and then you want to see the engulfing, which was printed right here. Now, this trade would have won if I had broken my rules, which is interesting to see, and why it's important to stick to one's rules, because if I then develop the bad habit of breaking my rules, I will end up losing many more trades. But you can see that, so according to my rules, I need to see an engulfing candle, or I need to see a candle with a long wick that closes in the top third of the candle. So that would be a hammer or a shooting star formation. I was expecting, you see that price tapped into it here, did not give me the reaction I wanted to see. So I wanted to see this low taken out. It did that beautifully. Now, I was expecting this candle to give me the entry signal. This candle is what I was expecting to give me the entry signal. You can see that this candle took out this candle's low ever so slightly and started trading higher. Now, if this candle had closed near or at its high, it would have met my criteria for a hammer candle, because it took out this one. The wick would have been long and I would have gotten somewhere here. But you see that this candle itself ended up being a doji. So no harm in waiting for a little bit of continuation to confirm it, which is exactly what happened. This candle could easily have been this candle where price trades aggressively, takes out the previous candle's high, engulfs it completely. So I went long here, put my stop below the low, and as usual, I target 3R. Now this is where 3R would have been, right above, right at, not even up to, right at Asia high. That's exactly what you see. Obvious liquidity target, obvious, entry signal. What happened? Perfect A plus setup. Did exactly what I wanted it to do. Started trading higher, but it only delivered about a 1.5 R and then completely reversed and tanked on me. One trend I noticed this week is that there was no follow through. I couldn't trust any of the moves. Monday, Tuesday, Wednesday traded bearishly. You would think that Thursday will continue bearishness. Thursday completely reversed that bearishness. You would think Friday would continue the bullishness of Thursday. That did not happen. Just take a look at the daily candles. When you see this kind of huge range daily candle and you know that this high is right there, this high is right there, you would expect the next candle to just trade into some 4 hour, fair value gap or something to continue the move. And you would think that this would be the target for the week, but there was no follow through. You can see it traded bearishly. So that was very frustrating. I took my first loss on Tuesday. I was still fine, right? Now, this is the first loss that I'm questioning a little bit. I have seen it happen before that a daily fair value gap will be tested multiple times. So I was telling myself, okay, maybe it wasn't ready at this point with this move. But if because I've seen it happen, I think it was on the pound in December last year, where a daily fair value gap was tested 3 times, 4 times, and gave 4 different setups. So took out liquidity, tapped into the daily bullish fair value gap, traded higher, gave about a 5 or a 6 hour move, came back, took out Asia low the next day, did not take out the previous Asia low of the previous day, but took out the Asia low of the following day, tapped into the daily fair value gap, gave the entry again. That gave another profitable trade. The next day again, did the same thing, took out Asia low of the next day, and then gave a profitable trade. So I'm a little upset about this trade, but at the same time, there is a precedent for it, and there was a very logical reason that I took it. So this was what happened. Price did this. Asia created a low, traded higher. London traded through it, took out Asia low beautifully. And what pained me the most about this week, right, is that there are weeks where price doesn't give you an entry. Your signals don't print. Like the previous week, I had just one setup. The week, okay, two. I had just 2 setups. The week before that, just one. The week before that, one setup, right? Because you're waiting the whole week. Some days you eliminate because of CPI or FOMC, you're not trading. And then throughout the week, you don't have any setup. Those days, such weeks I find are actually even easier because I used to think, it's difficult when you're just waiting the whole week for just one setup. But I realize how much worse a week can be if it is consistently giving you entry opportunities and every single one of them is losing. That hurts much more than having to wait for a setup. So I would take a week where I don't have any setups over a week where I have 6 and every single one of them loses. So Asia low was taken out. Admittedly, this low was not taken out. But if this fair value gap is going to hold, which I had no reason to not expect it to, and then look at this beautiful, this is what upsets me about the market. You do this, take out the low, give me a beautiful entry signal telling me that liquidity has been taken out, bullishness is stepping into the market. You're looking for a beautiful 3 hour, just take out this Asia high. I'm asking the market for 20 pips. What does the market do? Consolidate, then bam, takes me out for another loss. This was Tuesday morning during London session. I was so upset. I'm like, come on, man. Can I get a break? So that happened on Tuesday. And then I think I took another trade. So at the time now, if you go to the pound, I think I took another trade on Tuesday as well. Let me go. I'm trying to take the trades chronologically and not just examine every trade I took on a particular pair. Now, what happened was on the pound, there was something interesting at play. Now you can see that this was Tuesday, all right? This was Tuesday, and okay, this was Wednesday. Okay, so the trade, I think I had just one on Tuesday, right? But what happened was this. There's a daily fair value gap here. This coincided with the daily fair value gap on euro, but there was also a larger daily fair value gap here on the pound. Now, when this higher fair value gap got disrespected on the euro, I was thinking, okay, maybe it's because it wants to trade this weekly fair value gap is for next week. Maybe it wants to trade lower into this daily fair value gap, but you can see it did not do that. My alert is still here, right? So it ended up actually respecting this daily fair value gap, but without giving me an entry. So if you go down to the 15-minute time frame, what day was it? This was on Wednesday. Okay, so I didn't have the trade on Tuesday. Let me go back to the euro and make sure I don't have any trades before this pound trade. So the euro, I took one loss Tuesday, one loss Wednesday. So Wednesday morning was when I took this loss. So Wednesday afternoon was when I took the loss on the pound. So this was Wednesday afternoon. So I saw that, okay, since London did not trade higher, right? And there was a daily fair value gap on the pound, I was thinking, okay, maybe the setup wants to print on the pound. And this was my most painful trade this week. Now, what do we see here? Beautiful liquidity pool from the previous day. I believe this was the previous day's low. This was Tuesday's low, right? And that's exactly what you want to see. You want to see the previous day's liquidity taken out as price trade. So this was what price did. Price took out Tuesday's low, traded into the daily fair value gap that had been printed. And look at this beautiful candle again. Price tapped into it nicely at the start. So this was right at the start of New York kill zone. Did that, and then I took the trade, put my stop here, targeting 3R. Now you can see, look how close price came. Price gave me a 2.5R, 2.5R on some of the positions that I entered, because I entered on this candle and I started trading lower before I could completely, put in all the parameters, stops, targets, and all of that. So it actually yielded 2.7R and then just tanked on me and reversed on me. And now, in hindsight, one might say, yeah, why didn't you just take it at 2.5R? Why didn't you just take it at 2.7R? But remember that at some point, this candle was like this. This candle was a full bullish candle that was trading here. You would not have any reason to doubt that it was going to get here. Besides, look, there's a fair value gap right here that you'd be expecting it to tap into and fill, even if it's going to reverse. Like, I'm not targeting this high. I'm not targeting this high. I'm just asking you, give me 3R. And I'm overall bullish as well, right? So this is clearly a case of being wrong about, the direction of the market. The market had no intention of rallying, was not ready for whatever reason. But gave me an entry, I took it. And I don't babysit my trades. I don't monitor my trades. When I place a trade, I go out, I play table tennis, I do any other thing, right? And so I just came back to realize that I had lost. But then when I reviewed the price action, I saw that I had actually come very, very close to taking profit. So this was my third loss for the week. Then on Thursday, I took my fourth. On Thursday, I took my fourth loss on euro dollar. Now, this was the loss that I took on euro dollar on Thursday. No, was it? I didn't take a trade on euro dollar on Thursday. On Thursday was when I took the New Zealand dollar loss. Now, so let's take a look at New Zealand dollar on the weekly time frame. So first of all, let's go up to the higher time frame. This is the monthly time frame, right? On the monthly time frame, you can see that there's a monthly fair value gap sitting here in price. This is a weekly swing point. If I go down to the weekly time frame, you can see this right here. Beautiful. Now, I took a loss on the previous Friday when price took out this high, traded into the monthly fair value gap. I was expecting price to pull back. So that was the loss I took on Friday. Now, it has happened to me before where, when price trades into such a higher time frame level, the first trade you take might be a loss, but some other liquidity pool will form inside that level. Price will take that out, and then it will eventually sell. So that was what I was anticipating. That's what I was expecting. Now, if I go down to the lower time frames, we can see on Thursday, this was what happened. So on Thursday, this was the first time that price traded into that fair value gap. Did not give me an entry. I took the loss somewhere here, but you can see that this short-term bearishness started with, during Asia high. Didn't create any fair value gaps that I could trade. Didn't give me an opportunity to capitalize on this move. So what I was waiting for was for price to take this high out. We are still in the monthly fair value gap, to take this high out, then give me a bearish signal, And this was it. On Thursday, price took it out. This was the candle, took out the previous candle's high. This was during London close, kill zone, gave me this shooting star formation. I took the trade, and within a couple minutes, it had taken me out for a fourth loss on the week. So you can imagine, and these losses are heavy. I'm risking 1%. And all the gains that I had made at the start, because I was up 4R in February, and all of a sudden now I'm down 4R, following my plan, following my rules, following my, my setups. And so the final day was Friday, and those losses were taken on euro and pound. So this was what happened. The first loss was taken on the euro on Friday. On Friday, so I opened a total of three positions on Friday. Two were losses. So that was the fifth and the sixth trade that I lost. The seventh one was a break even. Now, I had told myself that, so Friday there was a lot of news. Those were the manufacturing PMIs, the one where you have French, German, UK. Then in the afternoon, you also have US dollar news. So I like to wait until all or most of them, have come out, mainly the euro ones, to take my trade. So this was what happened. Beautiful. This was a 4-hour fair value gap that was formed. Asia range created this beautiful liquidity pool. This is exactly what you want to see. After the PMIs, had come out, this was the first one came out. This was the second one that came out. And then now, of course, when there is news, you don't wait for engulfing candles because the ranges are too big. I've explained this before. Sometimes I would even go in on the 5 minutes because you're waiting for a 15 minutes candle to be engulfed, waiting for this entire candle to be engulfed, and you don't have much of a risk reward anymore. So just the slightest indication of bullishness, I would take the trade. And that's exactly what happened here. So after the news releases had come out, I took this one right here, and then I got taken out for a loss. Now, when I got taken out for the loss, it was because I believe at 10:30 there was also pound news coming out. If I check the calendar, so this was it. There was retail sales pound that had already come out, French flash manufacturing PMI that had already come out, German flash manufacturing PMI that had already come out. Now, pound flash manufacturing PMI, you don't expect it to do much. So if you can position yourself after German, at least that was what I was thinking, you can still catch the move, right? That did not happen. So 10:30's candle came out, and although I had lost the euro trade on the pound, this was what the pound printed. The pound printed this beautiful. So this was after the pound, manufacturing PMI came out around that time. This was it. This was the candle that's printed. So although I entered somewhere here on the euro, you can see this low got taken out. So this candle, beautiful hammer candle, took out the low. Still, it has taken out this Asia low inside the 4-hour fair value gap. Printed this candle. I took a loss. 5 losses on the day. 5 losses on the day. Okay, no problem. My bias is still intact. I'm waiting to see what happens. And then during New York kill zone, takes out all the lows. Still now we are in the discount of the fair value gap. Prints this engulfing candle. Now it doesn't look like an engulfing, but on the 30-minute candle, you see that it's on the 30-minute time frame, you see that it's actually a hammer. You see that it's actually a hammer candle. So this was it. This was the candle. Took out the lows, start of New York kill zone. I took the trade. And what do you know? This trade actually, you can see that it came the following candle, this candle came very, very close, but actually did not take me out. Did not hit my stop loss. And then look at this. Look how close it traded to my take profit. 2.5 hours. So that's 3 trades this week that yielded a 2.5 hour or better and ended up reversing on me for a loss. Now, at this point, I think dollar news came out. What was it? It was flash manufacturing PMI for the dollar as well. It came out. This was the candle, spiked up, and then just crumbled. So this was what happened. Price did this. At this point, I was in about 1 hour profit. Then flash manufacturing PMI came out, bolted towards my seemingly take profits. And I wasn't even looking at the trade again. I just came back. It was after the news had come out. This candle had already closed like this. And I'm like, what the hell are you doing, market? Almost got to my take profits then. So as this candle opened, I started trading lower. I just set my stop to break even because I'm like, look, I can't take 7 losses on the week. If you're going to continue and go to my profit target, no problem, but I'm not letting you come back on me for a loss. Ended up being the right decision, so I took a break even. That is 6 losses in a row, all according to my plan. Now, to review my trading, and this is the important bit. In hindsight, I'm thinking I should just treat these Fridays that have the manufacturing PMIs. I mean, just look at this day on the calendar. Trump spoke at 1 a.m. That's not relevant. Didn't know. But retail sales, French flash, German flash, pound flash, USD flash. I think I will just start treating these Fridays the same way I treat CPI Wednesdays, FOMC Wednesdays, and NFP Fridays. I'll add just that particular day of the month because I realize now I've never had a profitable Friday. I've never had a profitable, PMI Friday. It's always losses. Either I'm in a trade that takes me out at break even, or it reverses on me, or I don't remember the flash manufacturing PMI Fridays for good. I'm always losing, so I'll just scrap them completely from my playbook. I don't care. And again, by this point, you can tell my psychology was already being impacted because I took 2 trades in one session. That's against my rules. Although I had a good reason for it, I took one on euro, one on pound. I shouldn't have done that. And then I'd already taken 2 losses for the day. I didn't need to take this setup either. But it's Friday. It printed the setup. So I think I'll just scrap these Fridays altogether. Now, the second thing I want to analyze is on the New Zealand dollar. I realize I have taken 2 or 3, I think 4 of this type of loss, which is price takes out, a high and trades into a higher time frame liquidity pool. It did it the first time here, so I took a loss here. It did it here again. I took another loss. I think what I want to add to my playbook is the liquidity pool that is going to get raided for me to take a trade cannot be more than 24 hours old. Because I have noticed that all of my winning trades, it's the previous day's low or Asia range's low or high for that day that gets swept. Now, it might sweep. So let me show you an example on euro. The first trade I took, this week, that's lost. Although it was a loser, it's a perfect example of an A plus setup. So this is it, right? This is the daily fair value gap. This is the Asia range liquidity pool that forms it. But it's not if price just trades into it like this, your chances of taking a loss are higher because it's from 2-3 days ago. But what makes this trade an actual A plus setup is that Asia of the day in question also created a low that was taken out during New York kill zone. This liquidity raid, right? So this liquidity raid is what makes this an A plus setup. This liquidity raid is valid anytime price trades into this place. Of course, this liquidity would have been raided, but it's old liquidity. So I think I'm going to add, and I realize that almost all my wins so far this year, the liquidity that was raided is previous session or previous day at the latest, right? There might be a 2-day-old liquidity pool, a 3-day-old liquidity pool, but some liquidity pool from that day or the previous day will also be raided before the setup prints and the move occurs. So I think that's what I'm going to do. If I have a weekly level, and price, and you can see this is the way that the NZD trade differs from all these other trades. You can see that this was when price first took out that high to trade into the monthly level. You can see how old the liquidity is. It's over a week old. So this was it, right? This was from Friday, 24th January. That's when the liquidity pool formed. That's when the monthly fair value gap was created. Now you can see that price came all the way into it. Did not take out any liquidity pool. If I had seen something like this, price trades, comes close to it, then trades lower before then taking it out. This liquidity rate is what will confirm this entire move as my setup. But you see that here price just traded into it. Yes, it gave me my entry signal, this engulfing candle, but it lost. So that was the loss I took the previous week. Same thing happened again.